What is going on, guys? Welcome back to another market update. As usual, let's get straight to the charts. So we've had a very nice rebound here over the past couple of weeks or so, and the question is, how long will this rebound last for? Right now we have this engulfing green candle here, so it could have some legs left, but at the same time, obviously we are still in a downtrend. The bounce itself was to be expected because we did reach extremely oversold levels, and the good thing is that the bottom itself was not that much lower than the previous one, so we can clearly see that the trend is slowing down. Now, this could mean two different things. We could remain in this type of pattern where we're barely making any lower lows with each consecutive low that we actually put in, or it could also mean that we have some sort of final capitulation toward the very end of the cycle, maybe in September or October. This is what happened here and also here. But I'm definitely not betting on this type of capitulation where we dropped like 50%. If anything, we're probably gonna get something more similar to this over here where we had a smaller candle to the downside. Of course, this is assuming that the bottom is not already in, which is theoretically possible because we did hit that power law support. Speaking of the power law support, it's nice that we are above it again, at least for the time being. The power law fitting chart does allow for a drop to the high 40s, however. The power law oscillator chart shows us that we actually did dip into that dark green territory where we typically bottom out in bear markets, but I do believe that we're gonna go back there just to have a longer accumulation period, just like in the previous cycles. With the only exception being the 2018 bear market, where we actually didn't even reach that dark green territory. But to make up for that, we actually went there later on with the COVID crash. This brings us to the topic of the video. Are we living in the Matrix? This famous post perfectly predicted the top. Let me show you. So right off the bat, when I actually looked at the trading view chart, we can actually see that the prediction was spot on, like literally to the day. If you zoom in here, you can see that the prediction was the 6th of October for the top. And that's exactly where we topped out. However, the amount of days was actually 1,050 days instead of 1,064, but that's a small nitpick. So naturally, I actually wanted to test out all of the previous predictions here. And yeah, they were almost spot on, right? So we had 1,068 days, then 363 days, then 1,061, then 376, and then finally 1,050. So they're pretty much spot on within 2 weeks. With one more minor exception, namely in 2015, the actual bottom was in August, not in January. Technically speaking, yes, this here is considered to be the bear market bottom, but on most exchanges we did technically wick just a little bit below that. But on a closing basis, that was actually the low. So even though things are not as frighteningly accurate as this post would lead you to believe, I mean, come on, we're really nitpicking here, right? Because with any other asset class, this would be insane. And if we continue with the logic and actually take the 364 days as suggested as our prediction, then the next bottom would actually be the 5th of October. There are all kinds of variations of charts pointing out this pattern. As you can see, this is also a famous one. And yeah, the logic is the same. The market is really divided into 4 different sections. We have the bear market, the pre-bull phase, the first bull phase, and then the second bull phase. Now here's the thing. Typically, when it comes to trading, it's good to be contrarian. When everybody believes in something, then typically speaking, the opposite is true. Now, a lot of people are actually predicting that the bottom is going to be in October or so. So is it going to happen? That's the thing, right? Every market cycle, you have these people believing that this time is different. And in every market cycle, these people have been proven wrong. It's like literally the definition of insanity if you're trying to bet against this. Bitcoin keeps telling people every market cycle that this is how it behaves, and yet people keep believing the opposite because it's so difficult to believe that there's such a mathematically perfect asset. Markets are pretty chaotic, right? There's a lot of emotion involved. But somehow, when it comes to Bitcoin, all of this chaos comes together to create perfect order. So am I gonna bet against this pattern? Hell no. You probably know that I've been a big proponent of the 4-year cycle, and I do believe that there's a very good chance that we're gonna repeat it again this year. Alright, let's look at some of our other charts now, starting with the unemployment rate. As you can see, the unemployment rate has been coming down, which is pretty good. It actually shows that the economy is still pretty resilient. Paired with the fact that the federal funds rate is expected to remain relatively static at pretty hawkish levels, this actually shows that the Fed is confident in the economy's ability to withstand these rates. Now, when looking at the DXY versus Bitcoin, you can see that the dollar is actually forming an uptrend here against Bitcoin's downtrend, which is typical in bear markets, right? They have an inverse correlation, even if it isn't perfect all the time. When looking at Bitfinex longs, you can see that we are currently stabilizing, and wouldn't it be amazing if we actually topped out at a similar level as in the previous cycle? So what would happen if Bitcoin actually capitulated in October and then we had our final leg to the upside to similar levels as in the previous cycle? That would be pretty cool. Next, let's see what Minotaur is up to. As you can see, the bot has been capturing all of this intraday volatility beautifully. We use the 1% take profit nowadays because it's amazing for these types of crab market conditions where there's very little upside volatility. So all of these little moves are just compounding your existing Bitcoin, which is amazing. Now, in a bull market, I actually love the 2 to 3% range because you can capture more of the move. But in a bear market, you have to take what you can get. As usual, if you're interested in the system, then feel free to use the link in the description. You can rent the bot for $50 a week and test it out. And in the future, if you'd like, you can also actually purchase the system. We have tons of free daily calls you can join, and I will personally help set up your system. Here's another bot I've been running since the beginning of June, and you can see how many trades it actually has taken in this period of time. And every trade has been a win. Next, let's look at the precious metals. As you can see, gold is still in its bear market. It peaked out a little bit later than Bitcoin, but both of the assets are doing the same thing in essence. And when looking at silver's bear market, you can see that it actually looks like one of Bitcoin's earlier bear markets. Bitcoin right now actually looks way more mature than this. So as predicted, all of the people who are saying that Bitcoin is uninvestable and precious metals are the future, those people were extremely wrong. Stocks, however, they're a completely different story. They're still in a raging bull market right now, and Bitcoin just has to suck it up. Tokenized stocks have become very popular lately and they're all the rage, but still fundamentally you're investing in a stock, even if the barrier to entry is lower. But Bitcoin is the real value proposition right now. When looking at the crypto fear and greed index, you can see that we are still in the fear territory right now. So technically speaking, we could go a little bit higher, even if we've already had a pretty nice bounce here. So if this bounce that we currently are experiencing will continue for the time being, then it wouldn't be surprising if the month of July were to close in the green, which is quite typical. Very often when you see these two red months in May and June, then July is typically bullish, even if the rest of the months are bearish again. This is exactly what we experienced in the bear market years of 2018 and 2022. Okay, back to the charts. As you can see, this falling wedge pattern here is continuing to play out. So let's see if we're gonna have another retest to the upside and then maybe to the downside again. Or it could be that this rally doesn't really have legs. We're gonna have to see. We're looking at the Bitcoin's realized price bands. You can see that we are very close to the break-even price. So any further drop here would indicate a potential bottom here because this is what has happened in all the previous market cycles. When looking at the short-term price action, I am seeing a potential inverse head and shoulders forming. Right now it's still unconfirmed, so we're gonna have to see if this is actually gonna play out. But if it is going to play out, then this would be bullish in the short term. Here's a quick update on my long ladder. So I'm currently in one position and I'm waiting to add a few more positions if we're gonna get one more drop. When looking at the moving averages, you can see that we did actually get back above the 200-week moving average. And funnily enough, this is exactly what happened in the previous market cycle as well. We had this initial drop, then a move back above it, and then we had a more extended drop below it. So is this going to happen this cycle as well? Quite probable. Finally, let's look at the macro picture and RSI. So there are two main scenarios that I think are the most probable right now. The first scenario is that we just go sideways or only have a very small bounce here before continuing to the downside. And in this situation, we would probably have our actual RSI low below this low here, but it would still be a bullish divergence. The other scenario is that we actually go significantly higher here, and then when we finally drop, it will actually put in a higher low, creating a double bullish divergence. And the third most likely scenario is that the bottom is already in and the divergence is already there as well. And because all these three scenarios are still quite likely, I do believe that you should be accumulating when it comes to spot holdings. Leveraged positions are a different thing. Anyway, that finally wraps up the video because I literally had to go and take a cold shower while filming this video because our air conditioning just broke a few days ago. Contrary to popular belief, some of us Euro poors actually have air conditioning, and living without it in Milan, Italy is actual hell. My body is melting, my brain is melting, so I'll go take another cold shower. Anyway, see ya guys.